it seems that the market's just being driven by data right now. It's been largely positive out of the US, bearing in mind that we are still holding our breath for non-farm payrolls, unemployment rate numbers later today as well.
Absolutely, Alishia. Yes, I think for the first time in a long time, we haven't been hearing all this risk aversion data that has been coming out of Northern Africa and the Middle East. So we've seen that, more focus has been on the economic data and the state of recovery in the United States. Initial jobless claims started us off well, and there was a reverberation around the world to those reaction to those to that data. Retail sales were also good. Services, goods industries also had a great showing at five-year highs. I beg your pardon. And then we also saw that translated to Asia this morning, where they did well. Exporters really overperformed in that sector in anticipation of a US recovery. And we've seen that again today in our markets, where we're just riding along the wave, but also with the anticipation of non-farm payrolls later today.
Of course, we've got the market more leaning towards an indication that the labour market is recovering more quickly from the worst recession since the Great Depression than initially anticipated, but still unlikely to sway the reserve from ultra-easing monetary policies, and that a big support factor to keep in mind as well.
Yes, absolutely. I think the anticipation, or the Bloomberg's forecast at the moment, is between 175 to 196,000 jobs created in the United States. But yes, surprises may still come, and I think we'll see an adverse reaction if that number is lower. And we've got, the unemployment rate also coming out. Last month it was at 9%, and we're expecting a slight worsening there to 9.1%. So a lot of things still to be taken into consideration going into the afternoon.
Of course, it's a different scenario playing itself out of across the Atlantic. The ECB talking about possible rate hikes as of next month, and it's the first Western nation to do that. I mean, what are you making of that approach?
Yeah, I think there certainly wasn't any reaction, because we granted that the chances are that there will be hiking rates in April. We've seen a lot of improvement also in that economy. Their retail sales figures also came out; they were pretty good, and there's been a general improvement in the Eurozone. So I think the market reaction that we've seen has been to the positive side of things. The Euro did react to the ECB's announcement that it would possibly raise next month. But, focus really right now is on the world recovery, especially led by the United States.
Well, while all of that plays out globally, as of course, center of attention is some of what we're seeing play out in the Middle East as well. Oil holding steady enough for today, given the hefty swings we've seen of late. Still, though, on the back of a possible peace deal that many are pretty skeptical about.
Yes, I think there's lots of skepticism, but only time will tell. I think next week we'll get a better picture whether there will be some kind of reconciliation or some kind of peace brokered in Libya, and and also obviously the contagion effect that may have in the Middle East also, and oil has held up, but it's still very well bid. Last time I checked, it was about $115. But you must also remember, with the US recovering, demand for oil will also go up, and Chinese demand for oil will also go up. So that will have an offsetting effect there on, risk aversion coming down and oil prices going up because of the demand side.
Well, the scenario there seems to have had some bit of an offsetting effect for MTN as well. We had a trading statement out of that company saying it expects an increase of between 18 and 23% in adjusted headline earnings per share. Muted reaction to that, and of course this on the back of the fact that there are investors concerned about MTN's involvement in that Middle East, North Africa region.
Absolutely, it does affect them, and they've also been dealing with a strong rand. So in translating that, their main operations are Nigeria, Iran, South Africa and Ghana. So, translating that back into our currency would perhaps have an adverse effect for them. But also, I think the adjusted headline earnings also, which were guided to be about 18 to 23% higher, are taken as with with some salt, because when you take away those financial transactions that helped those earnings, it actually went down to about 3 to 5%. So, the player's not very happy with it. MTN has been down this year to date about 6%, and down today about 0.5%. So not really a very good day for them.
Good day for Naspers, though. We've got that player at the top of the top 40 today, rising just over 2%. Run us through what sense you've made of that move higher on Naspers today.
Yeah, it seems, Naspers has really been a star, and today we really can look to Tencent. They're releasing their results in about 2 weeks' time, and I think a lot of players getting involved in that stock, in anticipation of good results, and also in anticipation of a good dividend. So a lot of players getting in there right now, but yes, it's been a very, very good year for Naspers so far.